Hey guys, welcome to the next video. In this video we'll be going through structure and why it's important, basically how structure can play such a huge role within the market, and sometimes people even just trade structure on its own, and that's you can use that, but in my opinion by using other techniques and other confluences, a higher probability strategy than just using structure. So off the bat we're in the 8-hour time frame, and if structure can be seen as previous kind of resistance or support acting as resistance or support again. So what I mean by that is if it was acting as support over here, you can see once, twice, 3 times, 4 times. Once it's broken through, okay, it's had a sell-off, it came up to act as resistance over here. So basically structure is the turning points in the market, guys, and you can see it's all the way across here. So it was previous support, broken, now acting as resistance, okay? And we can see that again and again and again. So that's just one example right there. And if we do it up here, you can see, okay, some resistance around this kind of area here. And if you look back in time, resistance, 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 and then over here it was support, and over here it was resistance and some support over here. And we could keep going back in time if you want to, and you can see act as kind of resistance here and support over here. And if you want to go back a bit further in time, you can. And how you can see resistance, 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 support, support. Keep going back. So you can see in the market it gets attracted to this area. And that's basically telling you that price is having kind of it's a reversal point. So structure points are levels that we want to be interested in. Previous price action is telling us that it has a reversal point because it has some kind of reaction from this point. Okay, guys. So when you're looking in the market, these reversal points also usually align at cycle levels. Okay, so cycle levels are usually structure points. Okay, price gets wicked. Price comes into these areas. Orders are fulfilled, and then it goes back around. So if you watch the psych level video, you understand that psych levels and liquidity points work in unison because there's block orders at these around these around numbers. So it all kind of intertwines, and it's really simple technique to use. And you can see that basically if we go down to the smaller time frame, if you want to get more a bit more technical with it, you can see here all the way across. So it was acting resistance. You can even see these wicks kind of retesting acting as a support, okay? So this is just giving you an example of how these points can really help us in the market. Structure is not really a technical thing. I mean, it's a very simple technique, which I'm sure you already know. But you can see on the bigger time frames how this level all the way across here is being respected. All the wicks, okay? Remember what I said about the wicks? When there's wicks, it shows you that there's obviously it's a liquidity point, and that shows you that orders are being fulfilled, and it wants to kind of go in the opposite direction. So if this was a normal trade and I was doing my analysis, I'd have looked to the left, looked at previous price action, been like, cool, this was a previous support level, broken out as resistance, and this can now act it. Obviously, we look for the sell-off from kind of around from this region, okay, which it already has done from around here, which is obviously that was like 300 pips move from here to here. So that could have been a confluence in itself, and perhaps you had a weekly email or something like that, okay. So, structure points are basically previous support or resistance. If you want to go back in time, I'll show you one more example. Right, we're going to go on a different pair now just to show you some more examples. So you can see here, I've already placed the level on. Look, it acted as support here when there was a market crash back in 2019. And then over here, it broke through, tapped it, acted as resistance, broke beneath it. Came up, broke above it, acted as support. Okay, came here, broke beneath it. But it broke above it again, acted as support around this region again. Okay, you can see it's kind of left shoulder, head, right shoulder. Now it's obviously gone to the upside, but you can see here, if we go back in time, if we keep going back in time, I think this was the lowest it's ever been. So if we keep going, and we can see, look, again, keep going back in time, look, support here, support here, support here, okay? So it's like, it's like a historic, number, and back in time, you can see how it's been reacting off this area. Look, support, resistance. Okay, it's not always going to be completely perfect, but you can see how it's getting attracted. Look at its wick, tapping it, tapping it, tapping it, tapping it, tapping it. So this just shows you guys, structure is, you can literally go back to 2004 if you want to, whatever, 2000. But you can see, look, wick there, wick into this area, and it taps it, and then it has a reversal. So this is what I'm saying, guys. Structure is a hugely important thing, and it's, you can keep going back in time and checking, see if it's a turning point in the market, and if that aligns as one of our confluences, that gives us another reason to take a trade, and we can basically predict that there's going to be some kind of reaction off that level, okay? But one of the reasons we take trades is structure, and it's basically where price gets attracted to previous support or resistance, and this is what we call structure. So hopefully you guys understand that. It's an easy concept to grasp. It's just previous, floors acting as ceilings or previous ceilings acting as floors. That's the best analogy I can give for that. So hope you guys enjoy the video. We're going to be going through more examples later on, but that is just kind of the gist of it, to keep it simple and for you guys to understand it from kind of an easy point of view. But as we work through the examples, it's going to be getting a bit difficult and a bit harder with kind of like terms and stuff. So don't you guys worry. I'm taking you through step by step. But hopefully you guys now know what structure is. It's a super simple concept, and you can even do this on the 1 hour time frame, 2 hour time frame, 15-minute time frame if you really wanted to. So guys, even if we zoom down to the smaller time frames, like the 15-minute, I can stick a resistance on here. You can see, look, resistance, 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 all these wicks, and guess what happened? It was attracted as support here. So even on the smaller time frames, even on the 1 minute time frame, if you really wanted to be that specific, price gets attracted to these zones. You can see resistance, 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 support, support, support. Then it pushed up to the upside. You could do this. You keep doing the same thing again and again and again, if you really wanted to. So let's go back in time this way and have a little look at what is going on. So if I put a line on here as resistance level, okay, look, resistance here. You can see how it broke above it, acted as support once, came up twice, and then obviously broke. Okay, so you can keep seeing that these levels basically get attracted to before having a reversal or a continuation. So the continuation would have been sell off, pull back, entry, you could have entered off that, and the EMA, and then it had its continuation. Okay, so it's very, very simple, guys. It's just, you can do it on any time frame. Hopefully you guys understand the concept now. You can keep placing these on. Look, resistance here, broke through, acted as support once, twice, and then it pushed up the upside. So you can keep placing these on. There's so many structure points. It just depends what time frame you're looking at. But it's always relevant to, if you're trading the 15-minute time frame, then the 15-minute time frame structure would be relevant. Okay, same as if you're trading the 4 hour, the 4 hour time frame would be what's relevant. Okay, so hopefully you guys enjoy the video. It's a very simple technique, which hopefully I've explained easily for you to understand, and we're going to be going through more examples later on, but that is basically the fundamental lesson on structure.